as we've been talking about for quite some time, that the MBMG has investing in a lot of asset classes, maybe like in cash, in equity markets, and also in renewable venture capitals. So, what kind of asset classes do you focus most at the moment?
Well, at this time we are very conservative. We are risk off, as the market uses that terminology quite often given the European crisis. But so cash is king in our portfolios. We have quite a lot of cash at the moment, and we are very selectively how we allocate our cash to what kind of currencies. So at the moment, what we favor are Asian currencies, exposure to Singapore dollar, to Taiwanese dollar, Korean won, and to a certain extent as well US dollar, which we think at the time it's quite an interesting bet still to stay in the US dollar at this level where we are, and as well Thai baht.
Okay, so basically most of the asset class now you reserve as a cash, right? So what about the other asset classes? How much from out of your portfolio now?
Yeah.
Which part or which asset classes do you invest most at the moment?
Apart from our holdings in cash, we have two very selective holdings in bonds. So there, at the moment, if you look at US Treasuries, they don't really yield very attractive returns at the moment. So we prefer to go to high quality corporate bonds in Asia, especially. But these holdings are relatively small because we believe the crisis is not yet over. So we don't want to have a too big exposure in the bonds sector. We do hold a level of equities. So at the moment we were underweight for a very long time. We start increasing that now to a neutral level. So we look at Japan. It's off the radar screen, Japan, for most investors, but we following Japan since the last few months, and we start liking it because the dividend policy has changed in Japan. They're now paying higher dividends than in the US. So
in terms of the amount of money or in terms of dividend yield?
The dividend yield is more attractive. If you look at the US, the dividend yield of the S&P 500 is around 2.1% currently, versus a dividend yield in Japan of around 2.6 on the TOPIX index. So that looks pretty compelling to us. As well, price book ratios, they were around 2.5 or over 2.5 in 2006 and now are at around 1. So that looks very attractive to us.
So cash is good now, and bond in particular, some of the bond market is still okay, but you preferred some of your portfolio to invest in Japan equities. What about the emerging market as a whole?
We do like, due to diversification, we look at frontier markets to tip our finger in there as well, but for a very short, very small part of our funds, we look at frontier markets due to correlations which are very, very low to the other asset classes. So we think it's an excellent opportunity to diversify. The problem with frontier markets is that there are a few markets, look at Laos or look at Cambodia. Laos, the stock exchange, of course, is not liquid, all the listed entities. The same goes for Cambodia. So you need to get exposure through venture capital investments. So in that sector, we really look at renewable energy. I think that offers very, very attractive returns for the risk you're taking.
But from what you said, it's just like your portfolio is quite conservative, right?
Very conservative.
And for the risk taker, the risk averse is the best for the portfolio that you said. What about the risk taker? What would you advise or suggest them?
Yeah, slowly but surely you could put in your toes into the equity markets, but very, very carefully, very selectively. I wouldn't go overweight, but at least have a neutral position there. And what we start increasing as well is our gold holdings. So gold came off around 17% over the last few months, and it hasn't really worked as an insurance if you look at what happened in Europe. But we believe This is mainly due to a lot of selling has happened in gold bullions just to offset the losses in Europe or general stock markets.